Hello, I'm Julia Cordova. Thank you so much for subscribing to my YouTube channel and liking my videos. I really appreciate it. So if you're in the US, this is a 3-day weekend. It's Memorial Day weekend. And so futures start trading just like normal tonight, Sunday night, but it's an abbreviated day tomorrow. They stop just in the early afternoon and then start back up again like usual at 6 p.m. Eastern. But the stock market itself, the stocks and whatnot, equities, will not be trading tomorrow. So for those people who only trade equities, then it's a little bit of a holiday for those people. So with that said, last week I implemented what I'm calling the Martini Scale. So I basically will tell you whether or not I have a bullish or bearish bias on something, and then I will give you a level of confidence. It doesn't necessarily mean that how much it'll go up or how much something will go down. It's just how confident I am that that move will take place, if that makes sense. So last week I was bullish the markets, and the reason I told you was because, first of all, small caps had closed above the 9MA, daily 9MA, 2 days in a row. And then also Tesla, even though it had breached below that 650 area for the week, it came back to close above 650. And that, like I said, was burned into my brain from the very first time I shorted Tesla. So I knew it was a really important level. And I thought holding it was a good sign. Now, if you saw me trade live on Twitter or saw me tweet, if you have alerts set, you saw me buy NQ on Tuesday morning. And the reason that was is because if you looked at the schedule I sent, Fed notes were coming out on Wednesday. So it was a planned volatility event. And anytime there's an extreme move prior to prior to something we know about, this means that people are trading emotionally. They are either panicking or they are FOMOing, but whichever direction the move goes in, generally speaking, before that volatility event, if the move is extreme, it will normalize. So I thought my odds were super good. And the reason that I bought it a little bit early and I didn't wait for my support was because the velocity of the move that was happening. It was happening fast. It looked like it was, I don't want to say the C word, but it was going down really quickly. And I thought, okay, just based on the velocity of this movement, a lot of algos are going to pick that up. They're going to start competing because this is like, I was a little bit salivating that it was such a good setup. But, and I also figured even if I was wrong, even if I was early, I'd be okay. Just again, given that logic that I had. So that's why I got in a little bit early. That's why I was bullish, and yay for that one. Now, I was also bullish gold, silver, and miners, and the reason was because that it had held strength through market weakness, but I was hopeful, because I am a gold bull longer term, that it would also hold strength during market strength. You know what I mean. But basically, that happened last week. I mean, it was kind of impressive that gold and silver actually closed the week higher, as well as miners, just because of the strength of everything else. It means that the people that were in that already didn't sell it to buy something else, and that potentially that it's got even more room for upside because it wasn't, people aren't thinking about it right now. So I'm really happy with that. Longer term, that's a really good sign, in my opinion. I think so. So far, so good. So yay on that one as well. Then I was also bearish oil, and it's not like I'm like super bear, but basically I laid out a plan that said, I'm going to try it at these levels on an unleveraged basis, so small, in other words, and also with something that's not like, futures or, 3X kind of thing. But basically I wanted to short it above where it got last week. I wanted to short it above the triangle resistance because I thought it would fakey breaky early in the week, as markets went down. I thought that oil would go up and then vice versa, but that didn't happen. Both markets and oil went up, and I'm thinking that's one of them's got to give. So at least one of them's got to give. Either oil has to come down or the markets do, or both. But that's sort of my logic for this week. So, yeah, with that said, sorry I'm talking so much. Ready? Let's talk charts. All right. Okay, so, oops, I've got an ES weekly here. So, wow, what a candle. And so, I actually took profit for my long at the end of last week just because I had gotten, I had gotten most of the move. So I was like, well, I'm not going to be greedy. And I sort of still am sticking to what I said before, because everyone thought that we would bounce from 3,800. And guess what? We bounced from 3,800. And most people think we're going to go all the way here, which, by the way, we could. But I'm sort of still thinking that we might run into some serious resistance anywhere between 41.83 and the top of the channel, which this week is 42.37. So this week, depending on how fast it gets up there, I am looking to short. I will try a short scalp at 41.83. I'm not going to be greedy because it might go higher, but I'll definitely try a short scalp there. Make sure I take some profit if I have any then, and then just set a break-even stop for the rest. So that way I'll have, like, you know, gotten the win on that one. And then if it gets higher later in the week, or if it blasts all the way earlier, I'll take another short at 4237. And then I'll just make sure that I'm sized appropriately, right? In case it is going to break out and go to the moon. How will we know if it goes to the moon? If it closes above 4272.50, that's a early warning moon sign. It might backtest after that. There might be more room to get in, etc., but that is going to be our moon sign, because that line has been rejected now perfectly the last 2 times. So we'll have to see how it does if it gets there. Okay. Now, if the market starts by going down here, and if you're looking to get in, you missed this move for whatever reason, 4053 would be a good area to take a long scalp. You know what I mean? It's a little bit, it's a retrace here. Maybe try to add a little bit here, but I'm not going to be too confident on it if it gets below 4010 if you're on the long camp. So this would be the area to scale in my opinion, if you are looking to go long and we get there this week. And then below that, it's going to look a little bit unfortunate. You don't want 3 of these, 3 wicks. See, 3, and this one comes a little bit down, but not in that area, right? You don't want another wick here, because even if it does bounce there, it's not a good sign if you're a bull, right? So that's what I'd be looking for. All right, now let's go to Nasdaq. Oops. Okay, Nasdaq weekly. So that was my hourly. So basically for this week, it got back above that pink line that I was looking for confirmation. Remember, we talked about it last week. I was like, you know, that's sort of going to give us an early warning sign. And as soon as it got back above there, anybody who was short should have flipped, in my opinion. But, well, I don't know. We'll see. Anywho, we did close below this next blue line. So it's sort of immediate resistance at 12744.75. And if price can get above that and stay above that, then I believe it might test this 13,159 level. That's sort of a crisscross section of these 2 lines. So that should be pretty strong resistance this next week if it gets there. So that would be the area that I would look to definitively short if we get there, especially early in the week. Oh, I'd salivate to short it early in the week. But that's sort of what my thought process is. And then below, you know, where we closed is sort of right in the middle of this previous gap, and then right before this. So this is sort of a chop zone. So we'll have to see how price reacts to it when it opens up tonight. But if you're looking to get long, if you feel like, you know what, this is something that might have legs and potentially, you know, I missed out last week, 12352.75 is the area in which I would start to do it. Now, if it gets down here, same dealio as with ES. You really don't want 4 wicks down here, in my opinion, but this would be the sort of last hurrah, if you will, of 11914.5. Below that, and it's ew. And then below 11803, and it's oh no, right? I mean, it's still in this channel, but it will look like duty if it gets there. Okay, let's look at small caps. Okay, so we closed above the weekly key. That's a very constructive, but not hugely above it. So it's right here, 1874.6 is what I'm looking for. But it's about a 10-point difference down to this pink line. I didn't label it because I don't want a million labels on my chart. What? Anyway, you get what I'm talking about. So this whole area from 1864 to 1874 is sort of immediate support. And then we have the 9MA, wherever that may be. You know, if it gets there, it'll probably be around the 1910 area. And then the next stop, if it gets above that, would be this, I think this 20MA or this next line. This next line is going to be super resistance because look, see? So if it gets there, that would be a good area, in my opinion, to take a short if it gets there, especially early in the week. Again, the earlier in the week that something pops, the more likely I am to take a confident short, if that makes sense. If it starts to go down first, then folks will want to buy the dip. I think a lot of people will want to buy the dip. So if it rips first, I'll short it. If it dips first, I'll buy it. How's that? All right, now I put the daily here because I took the same little doodad thing and I just copied it here. So we can see here on the daily that that this flag will be false. I mean, it's already getting to be, you know, a good size flag, but we can see here on the daily at 1930.9, and it'd be like, breakout, everybody, breakout, get long, get long. But, you know, small caps is a beast to trade. So it's just very choppity chop, chop, chop. But that's what I'm thinking. Now, I should say, now on Sunday night / Monday, let me go ahead and do this for you. Oops. I didn't mean to do that. All right. Hello. Oh, I don't like it when it doesn't. All right, here we go. So on Sunday / Monday, there we go. Is that right? No, one over. Okay, 1905 would be the top of that bull flag, bear flag channel. Okay, yeah, and then down here, 1825. All right, now let's look at Bitcoin. Okay, so Bitcoin is just really frustrating me. I bought it on this line pretty much. It's still on this line pretty much. It's just flat. So my plan is to sell it if it gets to this low again and then try to catch it lower. Or it's just to keep it until it breaks above resistance. Really simple plan, but it's just not doing anything right now. It does not look good though. If I'm looking at it going, ooh, no, it does not look good. All right, let's look at ETH. ETH looks worse because it has a recent lower low. And I mean, it's got this, still it's got this divergence, right? But it just looks worse. So we'll have to see whether or not it bounces. Some of these divergences in crypto I've noticed don't work as well as divergences in equities. So just watching it for now. And all right, so you know, I've added an orange line here. So we can watch it. But basically, you know, if it closes below 8 cents or so, it's probably not going to be great. It really needs to start going upwards on the Momo. And it's not going to look bullish at all until it's still above this 9 cents level. So, you know, below, let's call it 7 cents. Okay. Below 7 cents, close, nay. Above 9 cents close, yay. And that's how I'm looking at that. All right, let's look at gold miners. Okay, so not the prettiest candle in the world, but I was thrilled. I was thrilled last week because it showed non-crappiness against all of that market euphoria. I'm going to just, I mean, it was really, I mean, I don't think people are euphoric yet, but people got a little like slobbery, this is the bottom, like, and a lot of people got like that. So I'm like, oh no. I don't know, but I'm not bearish yet. Like I said, I'm waiting. Anyway, it held well last week. It bounced down from the key and then it just sort of hovered there. So yay that it didn't leave any gaps here. If it comes down to 31.27, I will buy it with another tight stop here because I think that might just be a get rid of the bulls thing this week. But I'm not sure that it will. Hopefully it won't go lower low and we'll just continue up and try to get into this gap area. That would be my hope, is that we get a gap up, come back down, a little back testy, and then go up, right? So this week, the key area is 32.68 to 32.86 above, bullish below, not so bullish. And by the way, I should mention longer term, this is the weekly, we're still below all of the MAs. It's certainly not bullish yet, but it's looking constructive. Like I said, last week would have been the week to dump it. I think they could do it this week. It's possible, but I think they would have done it last week if they were going to do it, but we'll find out. So that's my plan on gold miners. Now let's look at gold. Gold had a great week last week, better than gold miners. Like I said, people weren't buying the gold miner stocks last week because you know, gold has been pooping, right? So people were buying tech and whatnot. Anyway, 1854.5 is the key for this week. That is right below where we closed. So I'd like it can come back down to this gap area and then go back up. But I'd like it to sort of hold there and move forward. If it starts to get way down here without a big bounce, then it's going to look a little bit dire, right? So just keep your eyeballs on it and we'll go from there. But I am encouraged by its strength last week. Now let's look at silver. Okay, so silver closed back above this black line by a pretty good margin, enough, right? And it bounced exactly off of this previous gap area. These gaps are really good. And by the way, have you noticed there's more gaps in equities? It's because of the liquidity, I think. I don't remember having ever, even in really strong volatility in the COVID arena or area, there was not this many gaps all the time. I don't recall this many because there's one like every week. But anyway, it doesn't matter. Okay, so bounce down from this gap area. But holding. So for this week, 21.77 is the area to watch. That's sort of the continued uptrend area. And 21.41 is sort of the redemption to buy. That's sort of the, you know, the last area that I'm looking to buy. Although, you know, there's hope down here. It's not like beautiful hope. So this is the best hope. This is the most constructive, right? And then from there on. Now, if it goes up and gets past this gap, 22.83 should be resistance. It's another one of these black lines. I'll show you where I got it from here. So right here. So I took the these lows from there and I got it all the way up from there. So you can see if things, that's where I got it from. But if things close above it, then yay. If they don't, then nay, you know? All right, see? Yep. All right, now let's look at oil. Oh my gosh. So I wanted to, I was hoping early in the week it'd go whoop, and then I'd be like, whoo, whoo, and then I'd short it and it would go down. But that's not what happened. It just kind of, it actually bounced down from here first. It was actually a beautiful short. I took a couple of scalps. Didn't make that much money though. I kind of think I came out flat for the week on it. But it bounced down from here and then bounced back up. And then it was like flirting with this gap level for the longest area. But it still hasn't broken out. Although that doesn't look like a horrible candle. So for this week, I'm going to be just a little more conservative, especially given XOP, WTF, XOP. So I'm just going to be a little more conservative and sort of wait to go cuckoo for coconuts until maybe it's down a little bit and it proves something to me. Okay, but there's an OPEC meeting this week, so it could go crazy. Just be aware of the OPEC meeting because, you know, all sorts of rumors, all sorts of stuff like that. It's going to be crazy, whatever happens. For XOP, because we broke out of this flag, I calculated the measured move to be 172.93. Doesn't necessarily mean it will get there, but that would be the next level of resistance if it continues to go cuckoo. It's got support at 150.76, and then below that, we're back down to this 138.47. Okay, let's look at Natty. Natty, kind of just like oil, closed right on the bubble for the weekly, right on the bubble for the daily. So what I'm looking for is on the weekly for it to stay above 8.548 to continue its uptrend. And on the daily, it's a little bit higher, 8.691. But that's sort of the level that I'm watching. And then if it gets, though, below this 7.868, then I think 7.6, why did it move over like that? 7.60 is possible. There we go, 7.60 is possible. So that's sort of the way I'm playing it. If it gets below here on the daily, it's going to get to this weekly. That's what I'm thinking. And if it continues up, 10.87 is my measured move from that breakout. Okay, that's it. Thank you so much again for subscribing to my YouTube channel and liking my videos. I really appreciate it. And I hope you have a great 3-day weekend and a great trading week. Okay, bye. See you on the interwebs.